I beg your pardon, the global currency markets is. We're joined now by Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour in Hong Kong. Dariusz, firstly, thanks very much for joining us on the Basis Point. Let me begin by asking you what the outlook for the euro is. Will it fall below 1.4 in the near term, given that we are seeing continued signs of weakness in the Eurozone?
It's true that the European economy is slowing very sharply and that the US does not look as bad as Europe. However, I would be very surprised if euro-dollar falls below the 1.40 mark. In fact, it seems to me that the drop in the exchange rate has gone a little bit too far, and I would expect a correction in that move anytime soon.
So you do believe that 1.4% is not a level you see the euro going to, that the dollar will weaken from these levels, is that it?
Yes, this is my expectation, because a lot of the problems that have besieged the US currency earlier this year are still in place, in particular the fragility of the US financial system, with a lot of concerns about the potential collapse of another major Wall Street institution. And growth outlook for the US doesn't look that rosy. So I think that the move has been overdone and that we should see a rebound in the value of the euro.
So again, Dariusz, if I had to ask you, where do you see the dollar ending at in the current calendar year in 2008? Do you believe that it will go back to the levels we saw it go against the euro, as in 1.6 possibly against the euro by the end of the year, given that the biggest concern for everybody is the problems that the US financial system faces, and that problem isn't going to go away anytime soon?
You are correct. That problem is not going to go away and should pressure the US dollar lower. However, I don't think we will end at 160. I think it's more likely that we will finish 2008 closer to 148, 150 at the maximum. And the reason is that interest rate outlook for the Eurozone is not as supportive for the common currency as it was earlier in the year, because now the markets are betting for a rate cut in the first half of next year, unlike earlier when expectations were for further tightening. So the interest rate anchor has been pulled away from the euro, a situation that will prevail, and it will prevent the common currency from reaching new highs against the greenback.
Right, but Dariusz, while you did mention that there is an expectation of an interest rate cut in the Eurozone possibly early next year, in the US, what's your own sense? Do you believe the Federal Reserve will go ahead and raise rates, given that inflation is becoming a very, very serious concern there?
My view is that until the end of the year, the Fed will not move at all, and probably they will start increasing rates in January. Like you mentioned, inflation is really high, and yesterday in the minutes from the August meetings, it became clear that there was an upward revision in outlook for core PCE price index by the Fed itself. So yes, they are really hoping to start raising rates, and they will do it as soon as possible. Now, when it is possible will depend on when the situation in the financial system becomes less fragile, and this is anyone's guess, but definitely it will not happen by the end of this year. In fact, usually tensions increase ahead of the year-end period. That's why my call is for the start of the Fed tightening cycle to be postponed until the start of 2009.
Right. Again, Dariusz, crude oil prices have been one of the big factors that have played on inflation across economies across the world. Now, to the extent that there is an expectation that oil could possibly come off and settle at $100 a barrel towards the end of the year, that is one view that some traders and some bankers have. There is another view that oil will continue to climb from these levels on $150, $170 is where it could possibly go to. What is CFC Seymour's own view of where oil will settle at by the end of the year?
We expect oil prices to rebound modestly towards the end of the year, and our forecast is for $120, which is around 4% up from current levels. There are two opposing forces that are at work in the crude market. On one hand, there is the downward pressure from deteriorating global growth outlook, which will reduce demand, especially from the developed world. But on the other hand, there still continue to be a lot of geopolitical risks that are materializing already in form of the Russian-Georgian war, but may be exacerbated by the conflict regarding Iran. And our view is that the geopolitical risk will push the price of oil higher towards the end of this year. This would definitely be negative from monetary policymakers' perspective, because we would see some further upward pressure on inflation.
Right, Dariusz, thanks very much for joining us on the show today. That was Dariusz Kowalczyk, Chief Investment Strategist at CFC Seymour Limited in Hong Kong. We'll go into a quick break now. But